Hey, good afternoon, everyone. It's Marv Eisen from Timeless Dollar. It's Tuesday, May 7th, and the market just closed. I want to give you a recap, and you'll notice I'm pretty informal today, but really you don't care about how I'm dressed. You care about what happened in the market and how you can profit from trading S&P E-mini futures. And I'm going to tell you just that. Here is the market action of the last 2 days. This is today, and this is yesterday, Monday. Let's talk about Monday because something dramatic happened over the weekend that caused this big dip in the market. This was the close of the market on Friday, and it opened up Monday, big gap down, and this was based on President Trump announcing new tariffs on Chinese imports. So when the market opened on Monday morning, it gapped down, and then it floated back up for the rest of the day. It basically recovered maybe 3/4 of what it lost. Today, something different happened, although it started out the same way. The market gapped down again, and unlike yesterday, where it gapped down, see, it bottomed out, and then it came back up, and it just kept floating up. Unlike yesterday, today's action was just the opposite. It gapped down, and it kept going down. For those of you who have taken my course and who know how to read a candlestick chart, you might know about the double dip pattern and to wait for the second leg of a dip. Also to read the candlesticks. I'm going to go to a 30-minute chart because some signals are easier to see on different time scales. On the 30-minute chart of today's action, the market gapped down and continued riding down. We opened up at around 29.12, and it settled to an equilibrium at 28.90. So about 22, 23 points was the first leg down. And then it settled at equilibrium for about 2 hours. And then the second leg took it down another 23 points. You know that you can take a pretty good entry on trading the second leg of a gap down. So here's what happened. The market opened at 29.12, settled, were stabilized around 28.90, 22 points down, and then the second leg took it down to around 28.65, which is about 25 points, right? So that was the second leg of the gap of the decline. And then it recovered big time in the last half hour of the day. There were several points today where there was an indication of a good entry. You don't see it here on a 30-minute chart, but I'm going to go back to a 15-minute chart. I'm going to show you something. On a 15-minute chart, there were 3 distinct places that you could have had a good entry. You could have guessed at a good entry and taken a position, and you would have been right. Excluding the jumping on at the beginning of the trading session, where you could have picked up a good 12 points, maybe a little more if you stuck it out. But there were 2 other places, actually 3 other places, where you could have jumped on with the indicators showing you that there was a good possibility. One was this doji right over here. You see this doji? Right over here was an indication that the market was going to reverse. Remember, these indicators are about reversals. Okay, and it did, although only for a brief period of time, but still in all, you could have picked up 10 points if you read this doji. Then there was a reverse hammer right over here, which was a terrific indicator showing you that a top could have been reached. Although this was not elevated up here. If it was up here, it would have been a very, very strong indicator of another leg down. But even if you didn't read that, here was an indicator, this hammer, where this was a dead giveaway, and I'll tell you why. Even though the stochastics were well into the mid-range, this hammer, first of all, it occurred after a big drop, a full day's drop, and it occurred at the end of the day, where typically the bulls will step in to try to regain some ground, and that's exactly what happened. So if you did nothing but wait it out until 2:45 today, or 3:30, I'm sorry, 3:30, if you had waited it out till 3:30 and just watched the market, did nothing in the morning, went for lunch, came back to your computer at 3 o'clock and just watched, you saw this forming, you would say, wow, this is a really good spot to take a trade. And guess what? This candle you could have jumped on, and let's see, it opened at 28.72 and it went to a high of 28.85. You could have made 12, 13 points. Not too shabby, right? Even if you had one contract, it would have been a $650 day just in this half hour. Just in this 15 minutes. $650 in 15 minutes. Would have been a lot of work waiting around doing nothing, right? But that's why I always say trading is like fishing. It's boring. You just have to have the patience to wait. Wait for these signals. This was a great signal. This was a very good signal. A little iffy, but good. This was a very good signal. Okay? Now, even if you missed all but this one, because this was the dead giveaway, you could have done great. Take my course at Timeless Dollar, because if you're looking for a way to replace your income, or if you've lost your job and you need another income, or you just want to have a second source of income, something that you can learn to do, take my course. It's inexpensive enough where anyone could afford it, and I'm here to try to help you so that you don't run out of money. Believe me, it happened to me. I was facing real hardship, and I tried a number of things, and eventually I migrated over to S&P E-mini trading, and I got an education. It cost me some money, but I did get an education. Trading is not easy, but it takes intellect and it takes patience, and it takes perseverance. Some days you won't even see a trade. Don't trade. It's better to not trade, sit on the sidelines, than to hop on and lose money. You're not in the market to lose money. You're only in the market to make money. So that's it for today. It's Tuesday, May 7th. I'll see you guys tomorrow morning. I'm going to shut my computer, or rather close this video and edit it, post it on my site. Have a great evening.